The world of establishment finance has only been falling behind where other sectors have been seeing progress. The value of fiat currency has been depreciating over the course of the last few decades. Your cash is burning a hole in your pocket. This shouldn't be the case when there is an abundance of lucrative assets to invest in. The most historically enduring asset of them all is gold. In the face of this impending economic crisis, gold is set to see one of its best markets yet. There is Bitcoin, the most well-known cryptocurrency. It's set to continue its exponential rise in value, but it's not without its risks and concerns, so invest wisely. Collectibles are a very lucrative instrument asset, but usually also expensive to maintain, so make sure to take out an insurance on them. The art market is booming, but you need to pay a lot of attention to the space and avoid sentiment if you want to profit from it. What we're about to tell you goes against everything you have ever heard about finance. Cash isn't king anymore, and it hasn't been for a while. Over the last half century, the world of establishment finance has only remained stagnant while other sectors have been seeing massive growth. The economic instability over the same period has put the value of the dollar in a tight corner. With the dollar on the ropes, all hell is about to break loose. Keeping your cash in the bank wouldn't just be investing in a bubble. It would be investing in one that burst a while ago. Your finances shouldn't be a victim of the investment market's decline. If you're serious about making that bag, and if your goal is to watch your spending power appreciate, keep watching this video to learn more. The value of fiat currency, especially the dollar, has been depreciating exponentially over the last few decades. Couple with this with the boom, bust cycle the global economy has trapped in since the 90s, and you arrive at the undeniable truth. You're only losing money by keeping your cash in the bank. Yeah, that's right. Scary, isn't it? You might not notice it right away. You might even try to rationalize it, but your cash investments are burning a hole in your pockets. It's almost concerning that it seems as common sense to invest in an inflationary asset. It's even worse when you consider the abundance of alternative investment options to be making a killing from instead. Let's start with the most classic of them all, gold. If you have watched any of our past videos, you probably have a solid idea of just how important gold is in our present global economy. Gold is probably the most enduring financial asset in human history. Revered for multiple millennia across several cultures and continents, gold is the go-to asset for times when other forms of currency fail. The price of gold tends to rise with the cost of living, so it's the perfect hedge against inflation. The price of gold tends to soar when the stock market plunges. Most investors don't talk about this part enough, but get this. Despite being a deflationary asset, investing in gold will protect you from deflation. During periods of economic instability, people tend to hoard their money and look for means to preserve its value. This drives up the demand, and consequently the price, of alternative investments like gold. Last time we got to see this play out on a large scale, I guess fortunately, was the Great Depression of the 1930s, where the price of gold soared while the price of nearly everything else dropped sharply. Every single major economic crisis in the 20th century and the 21st century was accompanied by a peak in the value of gold, hence why it's often called the crisis commodity. Just as an illustration, the price of gold has nearly tripled from 1998 to 2008, a time when the dollar was experiencing its first decline of the century. The price of gold nearly doubled from 2008 to 2012, a period of global recession reaching an all-time high of $2,000 per ounce. Gold has also become more expensive in recent times, also because there is less of it in circulation than before. Most of the world's gold supply comes from the vaults of global central banks that have been selling less and less of it since the economic collapse of 2008. The production of new gold from mines has dropped over the last few years after seeing a decade of gains. An asset like gold being in fixed or even better declining supply makes it even more attractive to investors. After all, what's better than one that is likely to hold stable over time? Now here's the kicker. There's literally no better time than right now to invest in gold. The American economy is on the brink of another crisis, the dollar is weakening, and interest rates are skyrocketing. The banking system has seen 3 of its biggest bank failures of all time this year alone. Federal spending has risen dramatically, accumulating in a bid to raise the national debt ceiling. All indications point to a looming recession. You can bet that gold stocks are already on the rise as a result. Gold mining stocks have surged this year, with the 5 major American gold mining companies, Goldfields, Kinross Gold, Franco-Nevada, Royal Gold, and Barrick Gold all outperforming the S&P. Gold prices are up 10% and are set for their best performance in 3 years, with an expected peak of $20,040 per ounce. Some analysts, like UBS Global Chief Investment Officer Mark Haffley, expect gold to surpass its all-time high, with Haffley in particular setting a target of $2,200 per ounce for the precious metal by March next year. We appear to be on the precipice for one of the biggest bull markets for gold in modern history. And if you're concerned about liquidity, gold is literally one of the best assets out there for that. You can withdraw it at literally any time and with zero hassle. It's very easy to buy, as you can purchase it in several ways, like exchange-traded funds, gold futures, and gold investment retirement accounts, and so on. Choice is yours. Gold is universally recognized as legal tender, and its prices are transparent, so it's really easy to sell too. And unlike with a lot of other investment options, neither the buyer nor the seller has to worry about getting cheated. Bitcoin is king. Next on our list is another favorite, Bitcoin. The cryptocurrency frontier has exploded over the last decade, with Bitcoin at its forefront, going from 1 cent per Bitcoin when it was created in 2009 to its current value of $20,000 per Bitcoin. Many investors are touting Bitcoin to be the future of finance. If you're looking to break out of the stranglehold of the establishment banking system, there are very few better assets for you to invest in. One of the reasons Bitcoin experienced such an explosive rise in price is that it's in fixed supply. There's only and will only ever be 21 million Bitcoin in circulation. With rising demand for Bitcoin in increasingly unstable times, this guarantees that the exponential growth the cryptocurrency saw in the last decade will continue into this one. Another upside is that this makes it practically impossible for any bad actors like big corporations or governmental entities from diluting its value and causing inflation. The only downside is you could call it that there is not enough Bitcoin to go around when the cryptocurrency reaches its max adoption stage. Even more reason why you should buy it now. One thing that makes crypto, Bitcoin in this case, unique is that it is completely out of the reach of the government. It is the one place where you can invest and carry out financial transactions without the Fed snooping. This is a godsend for people in countries like Taiwan and China, where the government often enforces strict capital controls. Thanks to the encryption of the blockchain, no government agency can tax or seize your Bitcoin without your cooperation. How does that freedom feel like? Bitcoin transactions incur low fees across the board. This is great for international payments, as they tend to be really expensive and take a lot of time. Bitcoin offers only a fraction of the rates that establishment financial institutions do for the same transactions. This is subject to change in the future, though, as the demand for Bitcoin increases, but even then, not by that much. Some things to note before investing in Bitcoin, though: it's still very volatile. Its volatility, that has been vital to its growth so far, also makes it an unstable investment. A wild price swing could bring you an astronomically huge return on your investment, or it could cost you a lot of your money. It's the biggest problem, though. Just make sure to only invest money you can comfortably part with for the time being. Another thing to note is the risk of theft. Hackers have stolen billions of dollars of Bitcoin from exchanges, wallets, and ordinary users. Many fraudsters have developed sophisticated scams to separate Bitcoin owners from their money in recent times. The easy way to mitigate this problem is to do your own research on cryptocurrencies and to always maintain a healthy amount of skepticism in the space. Lastly, and most important to note, digital wallets cannot be reset if you forgot the password. Several users have lost countless millions of dollars worth of Bitcoin to forgotten passwords. Make sure you don't lose your password no matter what. You probably don't need us to tell you, but this is very important. Next, we'll be discussing an investment option that doesn't get talked about much: collectibles. Collectibles are usually rare, always luxury items that are considered to be worth far more than their original sale price. Basically, their value increases over time. We're talking about things like antique cars, rare jewelry, and the like. Collectibles, like all the other investment options we've discussed in the video, have a low correlation with the stock market, making them low risk for an investment portfolio, something that is important for the periods of economic instability that we seem to be heading towards. And according to the Knight Frank Luxury Investment, collectibles beat 2022's wave of inflation, outperforming the majority of other investment classes, even gold. Some things to note about collectibles, though: they are usually high maintenance. A lot of collectibles, mostly due to the fact that they're already old items, require special, sometimes expensive care to keep them in good condition. Just a little damage, a little decay, can erase a large share of a collectible's worth. A collectible with a significant amount of wear could lose up to 70% of its value as a result. There's a risk of buying counterfeits, as the collectibles market is rife with scammers, so buyers need to be discerning. We should strongly advise that you purchase collectible insurance to protect your money if you're investing in this lucrative asset. It's a high risk, high return commodity. The last investment asset we'll be discussing that would be great for diversifying your portfolio is art. The fine art has been booming recently, hitting a peak of $67.8 billion in 2022. It seems like a new record for the highest price ever paid for an art piece is set 1 year only to be broken the next. But be aware, investing in the arts is an endeavor that you need to carry out with eyes wide open. Contrary to the advice of gallery owners, the last thing you want to do is buy an art piece based on sentiment. Make sure to look for quality in the art pieces you're purchasing. Pay a lot of attention to the up-and-coming artists in your local art scene. That's where your best opportunity for a return in investment lies. If you're looking to buy a piece from a renowned artist, make sure to get an appraisal first. Investing in the arts is risky, but is equally lucrative. In the last 2 decades, contemporary art has outperformed the S&P 500 by a significant margin. And with that, we've come to the end of the video. Do you know any other lucrative alternative investment options? Tell us about them in the comments. Share it with your family, friends, and even colleagues if you think they need to see it. For more videos about investment and finance, subscribe to the channel. Thank you for watching.